Hello guys, welcome to today's video. It's another beautiful day again, and thanks a lot for sharing your results with me. Okay, thanks for joining my $500 trading tips for trading boom and crash, and thanks for sharing your results with me. Okay, don't worry, there's going to be another one today later on in the day, but not in this video. Okay, quickly, let's go straight into today's video. Today's video will be looking at how to use stop loss to trade spikes in boom and crash. How to use stop loss to trade spikes in boom and crash. Okay, you will notice that throughout this week I've been considering trading of spikes, how to avoid how to avoid spikes while trading boom and crash, and also how to trade it successfully and where we are most likely to get spikes. So all these are very important if you want to trade boom and crash successfully. So today we'll be looking at how to use stop loss to trade spikes. Okay, that is what we'll be looking at in today's video. But before we go fully into that, I welcome you all to Qora Digital Cash. If you are new on this platform, feel free to browse through my channel, watch some of my video clips, and make sure you do your make sure you practice and perfect your skill first on your demo account before you dive into your real account. Okay, before you try them out in your real account. That is very important. And if you love my videos, can you give me thumbs up and share with families and friends? And also, if you have any question about any of my videos, probably you want to know more about my trading strategies, or maybe you would like to know more about my trading tools, feel free to contact me. My contact details are displayed on the screen, and I will be sharing, I will be putting them in the description box below this video. And if you love my videos and you are yet to subscribe to this channel, then you are missing a lot. All you just need to do is just to check below this video for the subscription button, click on it, and also turn on the notification bell beside it, so that you can be notified whenever I upload a training video like this. Okay, quickly, let's go straight into what we have for today, which is how to use stop loss to trade spikes. Okay, you all know what spikes trading is. Okay, spikes are the sudden movement in the market whenever you are trading boom and crash. Okay, I'm going to explain briefly how you can use stop loss to trade it. Of course, we all know that when trading boom and crash, for instance, whenever you are buying crash, okay, just where we are buying it, okay, the sudden drop down candles that occur, spikes cannot hold it. Okay, I'm repeating that again. Spikes cannot, stop loss cannot hold the spikes. Okay, stop loss cannot hold the spikes. The forces behind the spikes are stronger than the stop loss. Okay, so that is very important. You need to get that straight. Okay, stop loss cannot hold the spikes, so do not make the mistake of trying to use stop loss to hold the spikes. You can only use it to reduce the number of spikes that can happen. Okay, you can only use it to reduce this number of spikes that can happen. For instance, let me look for a very good example of what I'm trying to say. Okay, let's say okay, good, let's say right here, let me zoom it out a bit so that you will see it. Okay, right here you can see that we are having two spikes all together. Okay, this is one spike, and the next thing that happened is another spike which is even longer than the initial one. Okay, so all these, instead of you being in the market and allowing the spike to take you down to this level, at the end of this, the market will close for you. Okay, it will close for you with whatever profit or loss which you are in at that particular time. Okay, let's say you've been in the market right from here till this level and this spike occur, it got you to this level, your market will close with the rest of the profit. Okay, that is what you can use the spike to do. I mean, you can use stop loss to do. Okay, you cannot use it to hold the spike. You can only use it to reduce the number of spikes that can happen whenever you are trading. Okay, that is very, very important. You can only use it to reduce the number of spikes that can happen when you are trading. For instance, check it out. Let's say you are trading normally and you've gotten to this level and you are not using stop loss at all. Then these spikes, probably you are not online at that particular time. At this particular time, when the spikes were happening around there, the market will have the spikes will have gotten you down here before you know what is happening. But if you had used stop loss, definitely it will close your trade for you around here. Okay, and instead of you involving in all these spikes, you won't be involved in it. Okay, I'm trying to let you know one of the ways of using spikes whenever you are trading, but the first one I'm explaining is using it normally. Okay, so which means in most cases whenever I'm trading the normal trend like this, I love trading it on 5 minutes time frame or 15 minute or 30-minute time frame. The reason is, okay, let's say I'm trading it on 5-minute time frame and I've gotten into the market, and in most cases a single spike cannot claim the whole of the 5 minutes. Okay, it cannot claim the whole of the 5 minutes, or probably, let's say I'm using 15-minute time frame, a single candle cannot claim the whole of the 15 minutes. Okay, there will be a little push up, then a little spike in between that candle in most cases. Okay, so that way, let's say I have come in right from here and the spikes happen somewhere here. All that will happen is to bring me down a bit, and I will still have my profit there. So if it brings me down a bit, it's going to close the trade for me because I'm using stop loss. Okay, it's going to close the trade for me since it has touched the stop loss and push it down a bit. It's going to close the trade for me and I will be keeping my profit that way. Okay, that is when you are using 15-minute or 30-minute time frame, and sometimes 5 minutes. But if you use 1 minute, it might push you into loss because the spikes that happen in 1 minute happens almost regularly. Okay, so that is it. Okay, and probably you've not even gone far before it started happening. Okay, and that is why your trend is also very, very important. Okay, when you follow the right trend, then definitely you will be able to stay in the market, to have some profit for a while before the spike will start happening. Okay, this time around the main purpose is, okay, let's go to the next area whereby we can use stop loss. Okay, this is the first aspect of it, using it to trade normally. Then this time around we want to use it to trade the spikes. Okay, it is easier when you use stop loss to trade the spikes. Okay, and I'm going to show you an example. Let's go to boom 500. Okay, this is boom 500. Okay, very good. This is uptrend. The uptrend started from here, from this region. Okay, it started from here. So let's say you decide to come in right here. And this is, okay, let me change the color of this. Okay, I'm going to use about 3 horizontal line. Okay, I'm going to use about 3 horizontal line. Okay, I'm going to change this to red, and I'll bring in another one and change it to white. Okay, so that is what we'll be using in. Okay guys, this is what we are trying to achieve. Okay, we want to see how we can use stop loss to trade the spikes successfully, because it is easy when you apply it whenever you are trading the spikes, because there won't be any sudden reaction whenever you are trading the spikes. The only sudden reaction that will occur is the spike that we are trading. Okay, so that is it. So this is it. This is going to be our entry point. I'm going to use this light blue as our entry point. So we are entering from this support zone. Then let me keep this red line first. So I'm going to keep it somewhere here first. Okay, so this is what we need to do. This white line is going to be our what is it called, current action price. So as the spike is now remember, we are trading the spikes. That is what we are doing this time around. Remember that I've explained that of we trading it normally, that is trading the normal trend. This time around we are trading the spikes. Okay, so and the best way to trade the spikes, more especially for boom, is to follow the trend. When the trend is in uptrend, once it is in uptrend, then we should be getting ready to trade the spikes. Okay, so once we have confirmed that and we have come in right from this support level, it has spiked up to this level, the price action has gone to this level, then it spikes up more and more to this level. All you just need to do is, because you cannot stay glued to the system for a very long time, then probably you are on the road and you can't even be checking your PC all the time. You want to follow up with your mobile phone, so you won't be able to see this custom made indicator on the mobile phone, on the mobile platform. So all you just need to do is just to trail it up with the stop loss. So you introduce your stop loss to somewhere here. Okay, this is what it's going to do. Okay, right from this red line to this light blue line, there you will be keeping the profits that you are having there. Okay, then from this red line to the white line is what is at risk. Okay, what you are ready to risk in order to make more profit. Okay, that is it, which means let's say the price action reversed and gets to this red line, it will take you out of the market right on this red line. It won't go beyond that, and the rest of the profit will be in your balance. Okay, so as the price action as it is going up, then you adjust your stop loss to somewhere here. Okay, that way you have increased the profit margin that you are keeping or locking up for yourself. And just the way you have seen it, it came down a bit but didn't get to the red line, so it didn't get to the stop loss, but it went up again. You can still adjust your stop loss to somewhere here. So you keep on adjusting the stop loss till you get to the end of the trend, or till the price action gets to the stop loss. Okay, if this price action gets to the stop loss, it will take you out of the market with the profit from here to here. Okay, but if it does not get there, till it gets to the end of the trend, okay, till it gets to the end of the uptrend, which is here, then that means you will be keeping your 100% profit. So all you just need to do is just to close your trade on this. Okay, so the profit between here and here will be in your balance. Okay, that means you are making the 100% of the trade. Okay, you've made 100% of the trade which you have actually initiated right from here. Okay, so that is how to use stop loss to trade spikes. Okay, when you are trading boom and crash normally using the normal trend, you can only use stop loss. Stop loss cannot hold the spikes, okay, but it can hold the first spike. It can't hold the rest of the spike. Okay, let me put it this way: stop loss cannot hold the spikes, either the first spikes or the second spikes. It can't even hold the spikes, but it can help you to reduce the amount of spikes that will happen whenever you are trading. Okay, whenever you are trading. So if you understand everything that I have explained in the right from the beginning of this video, then you will be able to trade with it successfully. Okay, it is a simple secret which I just revealed to you. this is something I usually apply whenever I'm trading. Okay, when I'm trading the normal trend and I'm very sure I'm in the right trend, all I just need to do, if I've gotten some profit, all I just need to do is just to introduce stop loss in order to stop the spike. To reduce the amount of spike that can happen whenever I'm in a trade. Okay, more especially if I'm very busy. Then in terms of trading the spikes, all I just need to do is just to use the stop loss to trail up the profit till the end of the trend. Okay, so that is just the way it goes. That is just the way it goes. So all you just need to do is to watch this video over and over, try and understand everything I have explained in this video, and if you don't, you can ask me question. Okay, my WhatsApp details are in the description box below this video, and I'll also display it on the on the screen before the end of this video. Okay, try and understand everything that I have explained in this video. Have this set up on your chart, most especially on your demo account, since you are practicing with it for the first time. Then practice with this strategy and see how far you will go. Remember, in most cases I use M5 and M15 or sometimes M30 whenever I'm trading the normal trend. Okay, that will help me to give some gap in between. To maintain some, it will help me to leverage on the profits made, so that whenever a spike happen, then it won't take out all my profits and even take from my trading capital. No, it's not going to happen that way. In short, a single spike might not get to might not claim a meaningful amount of my profits. Okay, because I'm trading on 15-minute time frame, so a single spike is not possible for, in most cases it's not possible for a single spike to claim the whole of the 15-minute time frame. Okay, 15 minutes candle is not possible in most cases. So that way it gives me an assurance that I am in the right position and I'm trading the right trend. Once I'm trading the right trend, then I am good to go. Okay, so that is just the way it works, guys. That is just the way it works. So I want you to practice with this so that you will understand everything I have explained in this video before you try it out on your real account. And of course, if you have any question, feel free to contact me. My contact details are displayed on the screen and I will be dropping them in the description box below this video. If you are yet to subscribe to this channel, kindly do so now and turn on the notification bell so that you can be notified whenever I upload a training video like this. Watch out for my next video. Until then, God bless.